Let's get across the market open now. David Lane joining us from Focus Partners Australia. David, welcome to Wednesday. Good to have you back. As we get across what happened overnight, some weakness there, certainly a bit of a risk-off sentiment, given particularly where those longer-dated Treasury yields are heading.
Yeah, absolutely, Andrew. There's certainly global concern about continuing inflation and the cost of capital and cost of debt. So we're certainly seeing rising bond yields across the world, which obviously impacts the funding of governments, but then also funding of corporates. And we're seeing a lot of the tech stocks and semiconductor businesses who are needing a lot of capital to fund the AI boom have also come off in response to those rising bond yields and a few other concerns about the cost of capital around the world.
Yeah, so certainly weakness on Wall Street among those tech stocks. And we are looking, to a negative start on the local market again. In fact, just in the past few sessions, we've seen quite a bit of weakness on the local market. What do you put that down to?
Yeah, we have, Andrew. We'll probably take a negative lead from the US overnight. But having said that, I think that as we saw yesterday in Australia, our market is reacting more to individual company reports rather than the global issue. We saw the Nikkei off fairly significantly yesterday, and a lot of the other Asian markets were weaker. Whereas Australia, the index itself was actually relatively flat, but a lot of individual volatility of share prices reacting to company reports that have been coming through.
Yeah, most noticeably yesterday with those healthcare stocks driven in particular by CSL and Cochlear. What did you make of those?
Yeah, well, ironically, CSL records a massive loss and writes down billions of dollars, and the share price goes up very significantly. So investors, I guess, are probably hoping that we've seen the worst of CSL, that they've taken the big bath, and that from here we may well see an improvement in the CSL share price. Obviously, a long way to go. It's certainly not the darling that it once was, but investors starting to look at that healthcare sector as being potentially some attractive value. We also saw Pro Medicus come through with a reasonable result, and their share price rallied fairly strongly yesterday as well. So, yeah, a little bit of interest in that healthcare sector, which has overall been fairly unloved for quite some time in Australia.
And of course, David, a big one yesterday, BHP. Look, very much that focus on what they're generating from copper at the moment.
Yeah, absolutely. Copper's the jewel in the crown for BHP at the moment. Obviously, the iron ore price has come up a little bit, but the copper earnings have been very, very strong, and shareholders are being rewarded with a much higher dividend. So we saw a more positive reaction to the BHP share price, and a bit more interest in them from the longer term story.
We've got a copper gold miner out today in Evolution. What are your expectations there?
Yeah, well, similar to BHP, I guess that the copper earnings should be fairly strong. We've seen a very, very strong copper price, and also bearing in mind that the gold price has come off its highs, but it's still relatively high, and a lot of Evolution's earnings were at that higher oil price at the end of 2025. So we're expecting that there should be a reasonable result there from Evolution, and could well see a little bit of support, although having said that, we did see the gold price off a bit last night.
We've also, in the energy space, we've got Santos and also a couple of coal miners in Whitehaven and Yancoal. How are you seeing those?
Yeah, well, Santos, they've been benefiting from the higher oil price and higher gas prices. Santos's share price has been extremely volatile, but we think that they're one of the better Australian energy stocks, and think that hopefully that should be a positive result, and should see a little bit of support from the market. The coal stocks probably won't be as positive. The coal price hasn't been as buoyant as the oil price has been, but exports from the coal mining companies have still been fairly solid. So should be some fairly decent production numbers that come out from those stocks as well.
In the property space, we're going to take a look at we've got Mirvac, Stockland, BWP Trust. How are you viewing property stocks at the moment, David? Obviously, given what's going on more broadly, particularly in residential, but perhaps other parts of the property market holding up.
Yeah, certainly a lot of the, I suppose, the property stocks themselves, like the BWP and that are really still trading at a fairly big discount to their NTA and still generating some decent dividend yields. So from that side of the market, they're looking relatively attractive for long-term investors. Interestingly, a number of the construction companies have already released their results this morning. So Mirvac, Fletcher Building and Wagner's have come through with their profit results. And they've actually recorded sales up pretty strongly. And in the case of Wagner's, very, very strong profit coming through. Mirvac's result actually looks like it was relatively good. But I guess Mirvac, as you said, has that exposure to the residential property sector. So a little bit of concern going forward about the demand for properties, because we have seen from the major banks that there's a significant decline in mortgage applications and particularly in investor sector. So, potentially a little bit of cooling of that residential cycle. Mirvac, the outlook is a little bit more clouded than those pure construction businesses.
So, David, are you likely to adjust your portfolio in the midst of reporting season, given what you're seeing with some of these results, or do you want to sort of sit back and potentially just wait for the dust to settle?
Typically sit back and wait for the dust to settle, Andrew. Obviously, a lot of the companies will report their results and then announce their dividends. So a lot of our investors are income investors who look for those dividends. So unless there's a particularly bad reason to be out of the stock, typically we'll hold on for those dividends and retain those during reporting season. But we're watching very closely the results and looking at really more the guidance from companies rather than the individual results themselves, and reassessing our portfolios over the medium term once reporting season is through.